Financial markets can be really confusing. If you read the news, and you'll find a lot of different headlines will contradict each other. Some markets will be hot, other markets will be cold. But all markets are intercorrelated and interconnected. As an investor and a trader, how do you cut through all this noise? How do you find out what's actually important? The solution is the cheat sheet. The cheat sheet is 7 rows of information. Rows 1 and row 2 handle risk. Either risk is leaving the market or entering it. If risk is leaving the market, that's called risk off. And when risk is leaving the market, we see that prices go down. If risk is on, prices are coming up. When you gain experience and expertise, looking at row 1 and row 2 will give you the risk on or risk off indicators. They confirm each other. Risk will directly flow into the major market indexes and then into the crypto space. For example, you can see here, this is the S&P 500, this is the Nasdaq, this is the Russell, this is the Dow. And you can also notice that Bitcoin overlays them all fairly reasonably. Now, what does this mean? It means if the major market indexes are coming down, we expect Bitcoin and the entire crypto market to come down with it. But beware of retracements. I'll talk a little bit more about that in this video. Also, if you're in the Aussie market or the Japanese market, if you're in the European markets or the China, Hong Kong markets, all the world's markets move as one. And the leader of the orchestra is undoubtedly the USA. So much so, we even have a rule for it, Rule 217, no stock market. So the Aussie market, the European markets, no stock market can escape the US market's gravity. This is exactly why we assess the US market gravity inside row 3. In this video, we're going to go through the cheat sheet, and the cheat sheet is available absolutely free of charge at ctksmethod.org. There's a lot of resources there, please check them out. So we're going to look through row 1 and row 2 first. This will give you an institutional view of the markets, and you need one, because without it you'll just read news headlines and you'll seek to confirm your own biases. And that, my friends, is really, really expensive. One of the first places that you can start is to look more broadly. When we see Bitcoin, we can see that it's been coming up, but it's starting to turn down. And what are global markets doing? They're also turning down. We can see that Germany's market has suffered what's called a CTKS cut. This is generally not such a good thing. When you get cuts, it signifies a weakening in the demand or the upthrust. Why is this occurring? It's occurring because the inverted VIX is coming down. So that means that the VIX is spiking up. The VIX is the uncertainty of financial markets. It's the fear gauge. And it can give us some very, very powerful signals in terms of where the markets could be going. It's important that you see yourself as an institution of one. Do not classify yourself as retail. Retail gets slaughtered. Retail gets into all sorts of stories. We don't get into stories at all. We simply observe what the market is telling us. And right now, the market is a little bit weak. But just always remember, even though you get downtrends, you get reversals all the time. Price is always moving in a wave. Checking in on US liquidity, it's starting to make a bit of a rise. When we've seen this before, we've seen not only systemic problems in the economic system, that's why liquidity increases, but we also see inflation hitting asset prices. Make sure that you subscribe, because we'll keep our eye on all of these key factors for you each day. Let's get into the cheat sheet, and row 1 is the risk on, risk off indicator and confirmed or denied by row 2, which is also risk on, risk off. Let's check those out. These are the key charts that you need to look at. Retail trading and investing is highly emotional. People just tend to buy on green and to sell on red. Looking at row 1, we can see that the VIX, the volatility gauge of the S&P 500, has been coming up. The US dollar currency index, the DXY, the DXY, was doing really well, and then it fell off the cliff. And its best friend, dollar yen, just decided to join it. Moving across to row 2, we can see that the euro dollar exploded and the Aussie dollar exploded as well. All these Forex pairs are intercorrelated and interconnected. Heading back to row 1, there's a very important relationship here that you need to know about. If I invert Bitcoin, you can see that the VIX and the inversion of Bitcoin move together. This is an incredibly important relationship. What it basically means, if the VIX is going up, guess what's going to happen to crypto? But it's not just crypto. As you saw just in the opening credits, you can see that this increasing VIX is causing not only Bitcoin and crypto to fall, but all the global markets together. We also saw the 10-year fall off a cliff and the 2-year also fall. We're also seeing weakness in oil that also fell. Typically, when we get large moves down in terms of the yields and also in terms of the DXY, this puts upward pressure on the markets and crypto. Going across to row 2, we can see that junk bonds and crypto, they fly together. Basically, junk bonds is the inversion of the VIX, and you can see that blue line there, which is Bitcoin. It's following very, very nicely. If you get any aha moments when you're watching the video, please note what that is in the comments. You can always come back and refer to it later, and you can read other people's aha comments as well. One thing that you might like to just keep your eye on is gold. Gold really went for it. Now, why did it go for it? Well, the DXY came down, the 10-year came down, the 2-year came down. That puts upward pressure on gold. But it also puts upward pressure on crypto as well. Upward pressure on silver. We're getting confirmations across the board. This could be looking at a bit of a turning up in terms of crypto. Copper premiums recently adjusted, and if you saw the video from last week, I explained about copper, what exactly occurred there. We can see a slight improvement in copper. As an institution of one, trader and investor, you can see through row 1 and row 2, we've got the start of a bounce. How far that bounce will continue is another thing. We have to keep our eyes on our timing. You do that through CTKS structure. Looking into row 3, which are the major market indexes, what we look at is the S&P 500, the NASDAQ, the Dow, and also the Russell. And we have this overlay of Bitcoin, which is the blue line. You can see that directional correlation is very, very strong. A lot of stock market investors haven't figured out that Bitcoin is an incredible risk-on and risk-off signal, just like the VIX. This is because retail doesn't do what institutional traders and investors do. Retail will just look at the chart that they're putting money into and ignore everything else. Like somehow that chart just becomes absolutely separated from global macroeconomics. It's never the case. All markets move as one. And we can see here, when we look at the S&P 500, it's nearing a very important part just on a short-term basis. It's nearly breaking out. Now, if this is the case, we would expect some kind of retracement and potentially the forming, if we're just in a continuing downtrend, the forming of a lower high. Again, structure will tell us exactly what we need to know, but at the moment, the trend is down, with a possible retracement. Looking into row 5, which are individual stocks, the individual stocks move in conjunction with the major market indexes. So if you see Apple coming down and Tesla coming down, Microsoft coming down, Nvidia coming down, it's because the major market indexes are coming down. Why are they coming down? Because the VIX is spiking. And you can see that blue line in the background, that is Bitcoin. It is moving in directional correlation. That means keep your eyes on Bitcoin. And when we look at strategy, which is still MicroStrategy in TradingView, we can see Bitcoin and strategy are moving very, very tightly in terms of correlation. When you know how to read the cheat sheet, all of a sudden the world's global markets get a lot less confusing. What we're seeing from row 3 and row 4, the main markets are in a downtrend. And we saw that across global markets. Typically, when you are in a downtrend, you will find retracements. So these things are very important to keep your eye on. A downtrend doesn't mean it's going to zero. Now, we have to look into row 5 through to row 7. We've seen that Bitcoin is an incredible risk-on or risk-off signal. It just literally embodies the stock market, Forex, commodities, everything. It is phenomenal. You don't have to invest or trade in Bitcoin, but you sure as heck should know about it. That's if you want to make money. When you're in financial markets for a long period of time, it is very normal to make your own rules up. Having been inside financial markets for nearly 4 decades, I've got quite a few different rules that I can share with you. One of the rules, 225, is a very, very important one. Bitcoin cannot escape the stock market's gravity. That's the US stock market. This is proven day by day by day, but people still don't believe it. That's because they have stories. Can we see any proof that Bitcoin cannot escape the stock market's gravity? Oh yeah, you bet. Look at this. The blue line, of course, is Bitcoin. This is the S&P 500 futures. Now the S&P 500 or the SPX, it does trade in US market sessions, but the S&P 500 futures trade a lot longer, and that's why we look at them here. We know that gold and silver have popped up, and we also know that the yields have popped down, the DXY, dollar yen, the euro has come up, the Aussie dollar has come up. This is favoring a retracement in the next 24 hours. How long it is lived out is a different question. But if we see that, we could see a retracement to around here. So please bear this in mind. This is a retail level, but it's still good to understand what other people will do. Looking into row 5, we can see that total crypto market cap has been coming down, and we can also see there's some constructive action that occurred across the weekend. Actually, Sunday was pretty much an up day. If we look at Bitcoin, we're seeing the similar kind of thing playing out. Now, this makes sense given gold and silver were coming up. The US 10, the US 2 came down, the DXY, dollar yen came down. All of these charts are intercorrelated and interconnected. Let's have a look at Ethereum. Ethereum is also doing that basing action. So we could see an upward surge inside the crypto market, and that would capture a lot of people on the wrong side of the trade because they simply would look for a continuation. And there's a lot of reasons to think a continuation would occur, so it's not crazy to think that. This is why we must keep our eye on the charts. The charts are reality. Everything else is a story. For the Elite Service members, the indicators for total Bitcoin, Ethereum, and Pepe have been released. All you need to do is to just right-click on that back area and update the script, and you will see the back color changes to blue. TradingView has some kind of weird thing happening. It's not updating these indicator names correctly, but it will do so if you just do that right click. Also, you'll see this little recycle icon. That just means that that indicator can be updated. So when you update that, you'll see the different lines changing. We use the cheat sheet to understand the direction and momentum of changes. We use structure to understand our timing. When we look into total crypto market cap, it's pretty obvious that there's a positive CTKS gap. Now that can mean the price can move very, very quickly to fill that gap, but there's a huge amount of overhead resistance at that $3.7 trillion mark. If we go back up there, that could form a higher low. That area will be very, very important for us to look at. Now, when we look at Bitcoin, we're seeing very similar things actually, but Look at this. Bitcoin has a positive CTKS gap, but it's all the way back to 118,000. Now, what does that mean for us? And what does that mean for our strategy? We could see an explosion in Bitcoin. That would just freak the entire market out. How could we get the possibility of a God candle in here all the way back up to 118,000? Because structure says it exists. And we already know about that because we have the structure. We use the direction of the cheat sheet to understand when the market turns can occur, and we use structure for timing. It gives us an incredible insight on an institutional level. The video for this month's service video is going to be fantastic. I'm going to share some things in there that will literally change your game. We're already starting to see that shorts are getting liquidated. That puts upward price momentum into the markets. Moving in to row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. When we look at these particular charts, what do we notice? Litecoin is doing really well. Bitcoin Cash is also doing well. This is favoring an upward momentum shift inside the crypto market, but we know what that means. It's going to be reflected across the main markets as well. Always remember, price is always moving in a wave. It's always coming up and down. You must be a student of reality. That means just look at price and how it reacts. Don't worry about stories. Let structure take over the story for you, because structure is story neutral. Looking through these variety of different charts, it all looks fairly constructive for a retrace inside the crypto market. Going in and having a look at row 7, which is ADA, Solana, Doge, and XRP, it all looks pretty constructive as well. For the service members, Cardano, Solana, and also XRP have been released. So you can just right-click on the background and press Update. Now we can see ADA has reasonable levels of strong structural support around the 7200 mark. When we look at Solana, there's overhead structural resistance at 164 and around the 161 is structural support. When we look at XRP, at that 294 level, overhead structural resistance, and then lower levels of structural support. Always remember that even though the markets can retrace, they will do so in a wave-based function, if they do that. Now, the probabilities are that they will, but always be prepared for the downside. Retail can only handle one direction. It is either going up or it's coming down. But you can see realistically that's not the case. It's always going up and down. Now, there's a specific rule that governs this kind of behavior. Please let me know in the comments what that rule is. Trading and investing can be a very anxiety-ridden profession, but it's also a profession where you can grow incredibly, not just financially, but as a human being. Finding a way to get just a little bit better each and every day, and challenging the limits that you put on yourself. And that's the truth. Only we can put limits on ourselves, not others. This means that today could be the best day of your life. And it's not by accident that you're here and listening to this. By taking accountability, we can have the life that we always wanted. All you need to do is to commit. Just seek to be a little bit better each and every day, a little bit kinder, a little bit more understanding of yourself and other people. Don't forget, you deserve kindness too. If you would like to understand better how all the financial markets in the world move together, I am offering a partial scholarship to the Profiting from CTKS Method Structure course. You can directly message me on LinkedIn to find out more. Great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And if you saw that positive excellence section, please say something about positive excellence in the comments so I know you made it all the way to here. You are awesome.